On today's episode, I'm going to do my weekly series where I take a quick look at some stocks that I believe would be a great buying opportunity for me later this week. So like most of you, I put money to work on a weekly basis. So every single week, I'm either looking for a new investment or I'm looking for an old investment to dollar cost average up. And this method has been working for me in the past. I was able to build a nice six-figure portfolio through this method. And why stop what's working? So in today's episode, we're going to take a quick look at 4 stocks. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, and let's get started. Alright, so the first company we are going to take a quick look at is Activision Blizzard. This is in the gaming market. It's traded under the Nasdaq as ticker ATVI. We can see from its 52-week high, the stock is down about 23.28%. I am super bullish in the gaming market. This is a market I continue to talk up, and I'm trying to find companies that I believe are strong in this market. We can see here global consumer spending in mobile games for the first half of 2021 has increased about 17.9% year over year. And I think this is super amazing, right? Even though I'm bullish in the gaming market, I'm more bullish in the mobile gaming market. And we're going to see Activision has plenty of games in that market. And this is data from Sensor Tower Store Intelligence. So strong growth year over year. And this is to be reminded, right? COVID was really hitting hard same time last year. So a lot more people were at home. A lot more people were playing games. So to me, it's actually impressive that that growth in revenue still coming from mobile games is up there. If we take a look at top downloaded games, top apps on Google Play in the United States for September 10th, so that was yesterday, we can see one of the highest grossing games is actually Candy Crush. This is number 3. Candy Crush is actually owned by Activision. And if we take a look for yesterday, number 28 was Activision's Call of Duty Mobile. And these two games tend to always be in the top 50. I normally see Activision a little bit higher in the rank. I wonder what happened yesterday, but still, these are grossing mobile games, and like we saw, that overall strength in the consumer in the mobile games is still growing. So some recent strong news for Activision is on November 5th of 2021, so about a month and a half from now, maybe 2 months. Where are we? We're in September. About 2 months from now, Call of Duty, the impressive franchise, is going to release a new game on November 5th, and that's ready for pre-order right now. If we take a look at Blizzard, right? Blizzard is the one who owns a lot of big games like Hearthstone. They are constantly releasing new stuff where it's always pre-purchase and selling a lot of new products. Another one is Diablo 2 is coming September 23rd for Resurrected. And they also have a lot of sales, right? So to me, this is a franchise that has super strong names under it. I do want to say one of the risks right now is there are some lawsuits happening on Activision Blizzard. This kind of lawsuits can kind of lead to maybe some workers leaving. At the end of the day, I don't see much of a end to their franchise games. So still a pretty strong company right now. The second company is kind of correlating with that consumer growth in mobile, and this is going to be Paysafe. This is currently traded in the New York Stock Exchange as ticker PSFE. But before we talk about this one, let's take a quick listen to today's sponsor, guys. A great reason why I'm able to provide so much content to you guys for free. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So full disclosure, I do own positions of Paysafe and the other 2 companies we're going to take a quick look at in a bit. Activision is the only one I don't own at the moment. So Paysafe, this is one that has recently entered in my portfolio. I want to say maybe a month or 2 ago when it really dropped into these 8 levels. I'm really liking it at these price points, right? This is a previous SPAC, and we can see SPACs were super excited back then. From its 52-week high closing, the stock is down 55.6%. I looked at it here, but now is when I'm starting to buy. My dollar cost averages. I think my first position started in the 8 region, so I'm super excited, especially with the way the stock is at right now. So right now we can see it's a market cap of $6.1 billion. For those not familiar, let's take a quick breakdown of what Paysafe does. So Paysafe, in their most recent earnings, they reported revenue of about $384 million, and that was a 13% year-over-year growth. So their growth is not the biggest growth we can see from some of these other companies, but I think that's a-okay in my books. The first segment is their eCash segment, and this is pretty impressive. There are a lot of countries right now where banking and credit cards are still not a thing, and they need a way to kind of make their cash into some form of digital cash where they can pay for stuff online. And this is pretty strong growth in Latin America and in Europe right now. One great way that Paysafe is kind of entering this market or accelerating their growth is through acquisitions. For example, recently they did acquire Pago Efectivo and Safety Pay to kind of increase their Latin America exposure. And recently they also talked about acquiring Via Fintech, which is a Germany company, to expand their overall European exposure. So to me, that eCash segment, even though right now it's a little bit less than 1/3 of its total revenue, this is a market that can continue to grow. The second is their digital wallet segment. This is the smallest. And the third is their integrated processing segment. This is probably my favorite segment right now, and this kind of ties in with the gaming. So integrated processing, it makes up a good portion, about 191 of that $384 million of revenue. So a little bit less than, I want to say, is that about 50% of total revenue actually comes from this segment. And this is seeing huge growth in e-commerce verticals like iGaming. I am very bullish in the iGaming world right now. Even though I'm not much of a bettor, I can see how this growth is coming with sports betting, with online casinos, and so much more. The second thing is just specialized e-commerce. We are seeing the huge growth of e-commerce market right now. Even after COVID, this is still a market that is improving. And the final is ISV. So this is independent software vendor, I believe. And these are just pretty much like your gaming companies that allow some form of interaction, that they're using Paysafe integration payment platform to kind of accept money and all that. Again, I think gaming is still in early stages. They have a lot of big gaming companies on their back or working with them. So overall, Paysafe kind of makes that mark. What else can we talk about Paysafe? I do want to say right now, this is definitely not the best growth story, right? It's not something growing at crazy levels. A lot of people are more excited about some other fintech names growing at stronger levels. But I do believe Paysafe is super, super strong. This is a company that I believe will be very volatile, but one at these levels, I don't mind adding onto. The third company I want to take a look at, this is one I actually talked about last week, and unfortunately I was not able to purchase it. Just because I take a quick look at 4 stocks doesn't mean I'm going to buy all 4, right? I don't want to, these are just the 4 that I'm going to look at, and I buy every single Thursdays. There's no special reasons why I buy Thursday or Friday. It's just usually when my money comes in from paychecks and stuff like that, and I put my money to work. Sometimes I might buy all 4, sometimes I buy 1. On average, I usually buy 2 or 3 of them. Shopify was on the list last week, but I was unable to pick up some shares. Shopify is going to make the list again. This is traded under the ticker SHOP. So Shopify, for those that are not familiar, this is if you want to run an e-commerce store, this is the one-stop shop, right? It pretty much has everything. If you have a brick and mortar and you want to start the e-commerce market, or you just want to jump from the e-commerce market, with Shopify, you're able to kind of integrate into all these platforms at once, all these social platforms that are coming out right now. Another thing is they do a little bit more than that. They also do stuff like payments, capital, marketing, analytics, so shipping, order management, inventory, and fulfillments. This is a strong company for sure. One of my favorite things right now is on August 24th of 2021, so about 2-3 weeks ago, Shopify teams up with TikTok to let users shop from the applications. So Shopify, I think they definitely see who are some of the forefront social platforms, and they start to work with them to, hey, if you want to start selling some platforms here on Shopify and you have an account with us on TikTok, and you have an account with us on Shopify, now we'll be able to kind of link the platforms with each other. Great move. Again, I think the e-commerce, I think the content creator and the influence market is still growing at crazy levels. So I like this kind of evolution. If we take a look at revenue growth quarter over quarter, we can see this most recent quarter was about $1.12 billion in revenue, and this continued to increase quarter over quarter. We can see this nice uptick. I'm super excited. One thing I do want to mention is maybe that growth quarter over quarter might start slowing down, as there might be the fear as things are returning back to normal to some extent. maybe the e-commerce might slow down. I don't think that's the real case, but I do believe it can add some fear to the stock price and make it a little bit volatile. The final stock I want to take a quick look at is Square. This is traded on the New York Stock Exchange as ticker SQ. Right now it's kind of sitting at $247. This is down from its 52-week high, right? It was over almost $300, right? 281. So it's down about 12% from its 52-week high closing. Definitely seen better days. So Square, some things I'm super excited. First, on September 9th of 2021, so 2 days ago, them and SoFi kind of announced an exclusive partnership for the SoFi Stadium. And this is going to be a 10-year partnership. Square has been selected as the exclusive point of sale systems for the new SoFi Stadium. So partnerships with like this, right? SoFi has become a really strong brand right now. And this kind of partnership is, I believe, just showing you the strength of Square. Square continues to kind of improve and kind of expand into new markets. Here we can see on September 8th, they announced that they were launching Square registers in Canada. They saw that 72% of Canadians are looking for social distance cashless ways to support local businesses. And this kind of Square register will allow that kind of contactless payment solutions, which is pretty good. And that expansion into Canada continues. This company still has much more worldwide expansion. If we can see, another thing is on August 1st, Square kind of announced plans to acquire Afterpay. A lot of people were kind of wondering how this was going to go. I did a video on this earlier on in around August where I explained my thoughts. But overall, Square does seem to be super strong. They are expanding. I do want to say one of my biggest worries of Square right now, I want to say the first two that we looked at, Activision and Paysafe, I do believe these two, in forms of where they are as a company and their price relations, they are super strong. Like, right, the price points for Paysafe and Activision's right now are looking super attractive. I want to say the second to Shopify and Square, they have definitely seen quite a pullback, but these stocks have run up. Even though these are two super strong leaders, sometimes you have to pay premium for some superstars, right? You usually pay a premium, but right now I do believe Shop and Square have a little bit higher chance of being a little bit more volatile due to their current valuations. At the end of the day, so for me, for Shop and Square, I might be short-term bearish, but as a long-term investor, and that tells me that, hey, volatility might hit these two stocks a little bit harder, but in the long term of things, I still believe they are cheap for where they will be in the next 5 years. And that's why, that's why sometimes dollar cost averaging is the way to go, because sometimes I might buy high, sometimes I might buy low. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.